You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns to show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about into this video is AUD CHF. Now, why do I want to speak about AUD CHF? Because we are very near for the creation of a nice trading opportunity on it. So I want to give you guys a full breakdown of the situation that we have to show you where we can be looking for the next potential opportunity. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market. So first, we will be checking the COT data for the AUD, and then we will be checking the COT data for the CHF to see what hedge funds and the non-commercials in the market are doing. And then by the end of the video, we will try to understand where we have the highest probabilities for a nice trading opportunity on it. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a nice impulse to the upside. Now, generally speaking, after the creation of an impulse, what you want to see is the market provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.382 of the Fibonacci taken on the monthly impulse. So if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a 0.382 Fibonacci retracement, which is currently lining up exactly at this previous resistance turn support, creating a confluence of support in this area that we do expect the market to test. Now, why am I saying previous resistance turn support? Because if we look left, what we can see is that this zone is a quite strong historical structure level for this market. In fact, it was acting as support here, against support here, against support here, against support here, against support here. The market then broke below it. And at that point, this area was turned resistance because, as you know, in the market, previous support, once it is broken to the downside, is turned resistance. The market went for a retest here, created this rejection to the downside, and at that point, this previous resistance was turned support at this area. And we do expect the market to go for a retest of this previous resistance turn support before providing a potential continuation to the upside. So on the monthly, everything is quite clear. We do expect the market to provide a move to the downside before the potential continuation to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly time frame, we can see that we are aligning quite nicely with what we have on the monthly time frame. In fact, if we go down on a line chart, what we can see here is that we have a strong area of previous support turn resistance lining up exactly here. Now, why is that? Because here we have the previous weekly close, which is exactly what we have just identified by going on a line chart. When you go on a line chart, you see the closes in the market. In this case, the weekly closes, since we are on the weekly time frame. And we can see how the market has basically created a previous support area by printing this close here, and the market has then closed with this red candle here below the zone, which at that point was turned resistance. So inside of here, what we have is previous weekly support, now turned resistance, that we do expect the market to reject to the downside. So at the moment on the monthly, the market seems overextended to the upside and in need of a retracement. And on the weekly, we're testing previous support turn resistance, and we do expect the market to provide a rejection to the downside. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about AUD CHF after the market had printed this overextended M formation. From here, I made a full breakdown explaining all the reasons for which from this area we did expect the market to provide this rejection to the upside, and in fact, that is exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. Just a quick reminder, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. But at the moment, now that the market has already completed this overextended M pattern, where we can be looking for the next opportunity. Now, the first thing to notice here on the daily time frame is that the market has just broken quite a strong structure area to the upside. In fact, this zone was acting as very strong previous support, which with this move to the downside, the market broke to the downside. And at that point, this previous support was supposed to be turned resistance here. However, after breaking back above it, this zone is once again acting as support, which means that at the moment, since we have support here on the daily time frame, we have a bullish structure on the daily, meaning that even though the monthly and weekly are bearish, the daily is bullish. So since the different time frames are not contradicting, at the moment we have to wait for a break of structure on the daily before we can be looking for a potential trading opportunity. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last report, we went from having 12.2k net positions all the way down to having 3.7k net positions. So overall, the net positioning on the AUD is decreasing, so the AUD is getting weaker, with shorts getting increased from an institutional perspective from 50.2k to 60.2k, and longs getting decreased from 66.6k to 64k. And if we go and see what we have on the CHF, we can see that overall net positions also here are getting a decrease from 4.2k to 800 net positions, with overall shorts getting increased from 8.6k to 12.1k, and longs getting closed from 16k to 12k. So the CHF is getting weak, and at the same time also the AUD is getting weak. And as both the AUD and CHF are getting weak, that is exactly why at the moment we have so much contradicting structure here on the daily time frame, and the market is moving sideways, because if you have a strong currency against a weak currency, then in that case you will have an uptrend. If you have a weak currency against a strong one, then you will have a downtrend. But if you have strong against strong or weak against weak, then obviously you will have a lot of sideways movement and a lot of structure created inside of the sideways movement. So in this specific case, what we can see is that we definitely have sideways movement, and we also have already identified this previous support, which is now against support here. So until the market will remain from a daily closing perspective above this area, we cannot be looking for any kind of shorting opportunities. However, there is one specific scenario in which we would have a very interesting opportunity here on AUD/CHF. In fact, if the market will go for a test of this area and then reject this support to the upside, at that point, after the rejection to the upside, this area will be even stronger support. But if from the monthly and weekly everything is already bearish, there is definitely the possibility for the market to break below this support. And this would be the best situation here on AUD/CHF, because if the market will manage to break below this support, after the break, this previous support will be turned resistance here. So after the break, on the retest of this previous support and resistance inside of here, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from a 4-hour and lower bullish market as we will have to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point we will be adding AUD/CHF to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the monthly impulse, as we have already identified at the beginning of the video. If you enjoyed the video, make sure that you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a Q&A session every day in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.